If you are investing in Indian equity market, you must have certainly come across some scams, some traps which you often see in the Indian market. There are two common traps which I am going to disclose today, which happens in a day-to-day regular investing of any investor. These are very common traps, and again there are many more traps that could happen, but these are few very common ones which you can see against every individual or a retail investors that they get stuck into such kind of traps. But before that, I would just quickly cover up some scams which has happened previously, what are the learnings that you could take from these scams, and how you can be really very alert and attentive when it comes to investing in the Indian equity market. The first one is a Harshad Mehta scam which took place during the period of April 1991. So what Harshad Mehta did was he was taking money from the banks in order to inflate and rally the stock exchange in which he invested. So primarily his investment was into Bombay Stock Exchange, which he rallied for more than 200% in just 1 year of time frame. That is a very big movement in the index itself. Vis-a-vis, if you see in a current time, which is 2022-23 period, index has always given an average return of 10 to 12%, which also says that index moves somewhere around 10 to 12% on an average per year. To show you this further on the chart, as you can see this year, from the period of April to May, somewhere around in 1991 period, from then up until March or April 1992, that means in 12 months time frame, as you can see this year, Sensex moved more than 200% in the same time frame. The Sensex moved for more than 4,500 points in this 12 month itself, whereas the amount which was diverted was also very high, which was totaling to 5,000 crore in just 12 months, which was diverted from the Indian banking sector to this Bombay Stock Exchange. If you haven't watched this movie, then do take a time to watch this movie called as Scam 92. Moving on, the next scam is Ketan Parekh scam, which was more or less the same execution as Harshad Mehta scam. So he took almost nearby the same steps which Harshad Mehta took, and coincidentally, the information revealed that Ketan was working as a trainee under Harshad Mehta. Ketan Parekh didn't take the money only from banks, but he also sourced the money beyond banks from financial institutions and non-banking financial companies. This money was used to inflate the stock prices artificially for both the exchanges, the Bombay Stock Exchange and as well as Kolkata Stock Exchange. Well, there are 10 stocks specifically in which Ketan inflated the stock prices, and that's why those 10 stocks called as K10. Let me know in the comment below which are these 10 stocks, and I would be very curious to know if you are aware about these 10 stocks. The next quick one is a Satyam scam. Now, Satyam, for your information, is not the name of a person. It is a name of a company called as Satyam Computer Services Limited. Mr. Ramalinga Raju, who was the chairman of this company, he himself confessed to SEBI the manipulation that he has done in order to inflate his profitability, inflate his balance sheet, falsifying and presenting the revenues to the shareholders, which led to taking out somewhere around 5,000 crores of cash from the company itself. This was about the Satyam scam. Again, I'm not going into the details about all of this scam. The primary importance and the primary reason why I am explaining you these different scams are such kind of scams exist even now and are happening even in the stock market. That's why it is a paramount importance for you as an individuals to stay aware and be very alert and attentive when it comes to investing. Now coming to our main topic, whereby I'm going to cover about two common traps which any individual investor just like you and even me to that matter could get stuck into it. Let us go into the details and understand about it. I will at first cover a technical trap. In this concept of technical trading and technical investing, where individual investors and traders analyze and read through the technical chart, there is a trap and there is a concept called as misbalancing, where in reality is not a trap, it is something which an individual investors or a traders don't know. So for that, let me quickly explain you about the movement of price, what is the retest strategy of any stock that you would see, and where the misbalance happen. It is very important to know this at point first. So if you look how the price really moves for any stock is, it is either it goes in a sideways direction, which we call it as a consolidation, or else it goes in an upward direction, which we call it as a bull market, or else it comes in a downward direction, which we call it as a bear market. Now, if you look after any bull market to that point, when stock moves in this direction, these all price points are marked as higher highs and higher lows. So this becomes a point called as higher high and a higher low. This is a point which is called as the topmost point, which is the highest price point for any stock market, for any stock to that matter. When the stock falls down and it comes below this point level, as a retest strategy, every stock goes up until this point to check whether the stock is being retesting that levels or not, and further comes down. Whereas some stocks don't do this. So when the stock falls further, it, instead of going to this point over here, it simply moves a little bit level up and further comes down. So there is this gap of a price point which is untested by the stock market. This same gap and same price point, when the stock further comes down, market starts rejecting this price point. Why? Because all the individual investors who have purchased this stock at this point, they didn't get the opportunity to move out of the stock when stock came to this level. Rather, stock didn't actually come to this price point. That is why this misbalance of price point happens, and during this misbalance point, whenever the stock comes, the market reacts very rapidly and it even corrects to a very good level thereafter. To show you some live examples of what misbalances happen in the stock trading and investing world and where it happens, let us look at some of these charts. So here I am taking one example where stock has been coming down with a downward move from top, as you can see this from here. When price came to this point, it is supposed to retest this level by the time when price came here. So there was this gap which got created where the individual investors who had invested during this time and even in the past period, they didn't have the time to move out of the stock when stock fell further from here. This gap is called as a misbalance, which you have seen as a result over here. So this green candle clearly acts as a trap for many people to get out of it. So in reality, if you see, it is not actually a trap. It is just that some old investors who has invested, who didn't get an exit point back then, they are still active in this stock and they are waiting for the stock to come to this point, and they see a rapid reaction thereafter. Many individual investors go ahead and buy because there is a breakout strategy that they see when the stock goes above this. To see what kind of investors are stuck with this, if I show you some old data on the same chart as a price point, between this gap, all those people who have been purchasing this stock and invested into this stock from these all levels, they are the one who exit once the stock comes to this price point. This is a concept of misbalance in trading and investing world, which also acts as a trap because people and investors and traders, they don't look at the price point of an historical data. They just buy once they see a small breakout in this stock. One more example to show you on this misbalance effect and how not to get trapped into this misbalance is this one. So if you see the chart of this company, the stock price when fell from this level, it couldn't retest this point. The price movement was only till here. Now because of that, you will see when the stock will come to this price point, to this gap, market will definitely react because the many individuals who have been purchased and invested this stock during this time frame and even previously didn't had an exit point. Likewise, on this same chart, there is one interesting gap which is created. If you can pause this video for a while and highlight and try to examine yourself whether you can identify this misbalance or not. Just take a couple of seconds to practice this out here. To show you, I hope if you have seen this, if not, then just to show you where this gap is. If you look at this price point, there is a gap whereas market has not retested this level. So once the market comes to this price point, either now or in future or in after 5 or 10 years time frame, whenever the market comes for this stock to this price point, it is going to react very heavily and many individuals will be stuck into this stock as a trap. Now again, I'm not talking about any specific stock over here. This is not a recommendation or advice. This is neither an advice to not to invest into those stock. Do your own research. This is merely an attempt to explain you how the misbalance effect works and how you can be safeguarding your own investment, not by stucking into such traps. Now, let me take you through a fundamental trap. Now, this trap is usually common in normal day-to-day life, and even now when you're watching this video, this trap might be occurring in a real-time moment, even in the market as of now. This trap is called as a research fund house trap. Why do I call it as a research fund house trap is there are many research based companies who are providing some false research to individual investors and they are investing on the basis of this trap. Now, I don't want to take any specific research fund house name over here, but this is a report which I'm trying to present to you, and I want you to understand how this report is constructed in order to trap you. And I'm even going to prove you in a live chart whether this particular stock which was recommended by this research house, where was the price when it recommended and where is it even now. So let us go through this research report. This is a pretty old report which I have considered for our example, which was in the year of 2019. It is for the company called as Coal India. We all know that the market price at the time of publishing this research was 195. They gave a target price of 264 with an upside of 36% possible in this stock price. If we go and understand, there are few points that they highlighted very nicely, and look at the way the research report is structured. At first, they are highlighting that it was a very good standout year for Coal India. After that, with some explanation, they are justifying that despite being such a good performing year, there is still a very good room left for this stock to appreciate even further. That means there is a very strong pricing power where Coal India could make more and more revenue and show more and more profit in the coming time. And with this analysis, they are highlighting the point that despite being such a strong performance, the stock has been underperforming at its price point and the stock is down 30%. So in a way, they are convincing you that the stock has been very well previously. The stock has a good room to expand further, to grow further, the price to grow further, and it has been at a discount price available. Further, they will go ahead and explain you all the nice points when it comes to what kind of expansion plan that they might have globally, locally and internationally. So they go further and explain you where India stands compared to all the global economies in terms of coal production, coal consumption. Now they make a standpoint from their purview that considering the next 12 years of expected return, expected growth which is there in this stock, they would want to value this stock at a 50% discount to a current market price, which you can see here. And that is why they are saying that there is still a very good room left, because considering next 12 years, that is a long-term horizon that they would want to consider, there is still a good room left out for this stock to further appreciate. And that is the reason why they are giving this recommendation call to buy this stock at this price point. Let us see a live result of this recommendation and what happens to the stock thereafter. One more small point as we move, this research house is proving you with some statistics and numbers the projection that it has made for next 12 years where the company growth could be, which you can see in this research and the table which they have presented to you. So in a way, they have convinced you that there is a growth expected in Coal India. Now let us see this live in the chart. Parallelly, I am keeping the summarized information for you here that they are recommended a buy at a price of 195 on 6th of September 2019 with a target price of 264. This is a live Coal India chart which I have taken. So if you see, the price at which they have recommended was somewhere around 195 in 2019, 6th of September. That's where my mouse is at this stage. The recommended price then was a 36% appreciation, which is at a price point of 264. As you can see, thereafter, from this recommendation price point, forget about the stock even reaching near to this target price. It fell down further by 40%. Many of the individual investors might have screwed up their money and stuck with their money in this stock because of this recommendation. Over and above, from that point up until August 2022, that means almost 3 years of time frame it took for the stock to return back to the same price point which was recommended. Further, when the stock came after 3 years of efforts, to this point the market reacted very much extensively, and I don't know how much time further it would take for Coal India even to reach that price point or to cross even above that. This is a very clear example of a trap by a very big research fund house. Well, my video and the purpose behind making this video is not to scare you or not to tell you that not to invest. Definitely market में invest करना, but एक आपके एक्टिव थिंकिंग के साथ इन्वेस्ट करना, आपके खुद के रिसर्च के साथ इन्वेस्ट करना. These research reports which are presented by these research fund houses can be used in your favor. So instead of you getting into the trap and favoring the fund houses so that you get stuck, your hard-earned money gets stuck into it, use these research reports and many other research reports to go through them, to understand how they are researching this company or any company to that matter, and what are the learning points that you could get from such research reports instead of just buying or selling on the basis of such reports. Well, that's all about this video. Do share this video with your friends, family members, with your relatives. Discuss these points with your friends, what kind of traps happen in the stock market. Try to get the learnings from them as well, so that you become a very wise investor and it improves and grows with time. See you in the next video. If you haven't subscribed, please subscribe this video. My next video is going to be further about new topics, new learnings that you could take away. This is Ajinkya. See you in the next video. Good luck.